You doing? How's everybody doing? Are we good? Yes, no, maybe? Still thinking about it? So. Can you guys even see? Still not the clearest. The blinders are shut. Okay. Let's work with what we got. Let's see how it goes. All right. Okay. Yeah, so today it's just about revision, and I will confess I haven't had as much time as I would have liked, because initially I wanted to get through 4 papers, or at least look at 4 papers. Now, the only papers that I could get on your test 2 for financial management is, did we discuss which papers we're going to look at? We didn't, ne? Okay. So the ones that I could see, or that I found on the database, there's 2023, and then from there it goes all the way down to 2019, 2018, and 2017. So it would have been nice to get 2022 and 2021 at least, because then that's more recent. But it's fine. At the end of the day, they're asking the same questions. You can see that the focus of what they're asking. But yeah, I would make sure to study the other content as well, that might not have been emphasized in 2019, 2018, and 2017, because obviously chances are it's going to be slightly different from those particular years. Okay, so I'm going to start here with 2023, and I haven't yet shared these suggested solutions. I only managed to do 2023 and 2019. Those are the only ones that I managed to have a look at. So yeah, we're going to start with 2023. Okay. So if you look at question 1, what they asked you there, they asked you under the required. I'm going straight to the required here. Okay. And under the required there, they're saying calculate. Sure. This is bad. Let me zoom in and see if you guys can see better. Does that help? Okay, so under the required there, it says calculate. Let me also just expand this. Calculate the aggregate break-even meals and sales for Quincy. So you aren't given anything below the required. That's all my own things. Okay. This is all that you've been given. All right. And on my suggested solutions, maybe before we get into it, here's the link. So if you ever want to go and look at the original paper, maybe there was a typo or something that isn't making sense. Maybe you want to verify, is that what was actually asked, etc. You can always just click on that and then it'll take you to it. Okay. Right. So here they're saying Quincy is a local restaurant that introduced 2 new meals, all right, meat and vegetarian, to its menu recently. These meals have the following revenue and cost per meal. Okay, so they've given us the selling price per meal, they've given us the variable cost per meal, and then they've obviously given us the fixed cost per meal. Okay, and then the meal fixed costs are based on the following: sales number of meals. Okay, all right, so in other words, the number of sales they project for the respective meals. All right. So then they say calculate the aggregate break-even break-even meals and sales for Quincy. So I'm guessing they mean sales as in the number of units that need to be sold, isn't it? So how do we do that? How do we calculate that aggregate break-even? You guys have started revising, right?
I was actually doing this. So don't you have to work out the difference between your selling price and your variable cost price per meal?
To get what?
Your cost something margin.
Your marginal income per unit, isn't it?
Yeah.
100%. So that's the starting point, yes. We want to get there. Yes, well done, well done, well done. No, guys, yeah, you should have started studying by now. Monday is around the corner. So in order to get the aggregate break even, remember when we say aggregate, we're looking at all the products that you're selling. And in this case, we obviously have two products or two meals, okay, that we're selling. So it's going to be your total fixed costs. I'm going straight to the end formula. Total fixed cost divided by your average contribution per unit, okay? So first thing, as Thomas highlighted, is we need to find our contribution margin per unit or our marginal income per unit. Okay, it's the same thing. Okay, so here again, we're just looking at the information that they've given us. They gave us the selling price, they gave us the variable cost, they gave us the fixed cost per meal based on 28,000 meals for meat. And then obviously your vegetarian, they gave us the same, but your fixed cost there is 22 Rand per meal based on 12,000 meals. So in order to get our total fixed cost, we obviously need to times our number of meals times the fixed cost per unit, all right, or per meal in this particular case. So here you can see we did exactly that, all right, right after obviously calculating our contribution margin per unit.
So then that 336 is going to be divided by your average contribution.
Yes, the 336 plus the 264, because we also got the 264 from the vegetarian meals, isn't it?
So could you make two meals, you add them together?
Yes, because remember we're looking for the aggregate break even.
Okay, and then I was reading the textbook. If you can split them, like the different products, and find how
Yeah.
your fixed cost was broken, would you still split them, or would you just do them as one?
You do them as one, eh? You do them as one, because remember here we're looking at the break even. We didn't say the break even per product. We said the aggregate break even. So we're looking at the whole business. If we said okay, the break even for vegetarian or the break even for your meat, that's when we would then say okay, let's split them. Okay, right, 100%. And plus, they've never asked a question like that in your textbook. So, I mean, they can very well ask you because it's just now application of what you already know. But yeah, I wouldn't imagine that you should split them when they've never given you a similar question where we've had to split them. All right. So they should clearly communicate that, is what I'm basically trying to say. So here we've got our combined fixed cost of 600,000. Then we want to get our total contribution. All right. So we basically take your 22 Rand, you're timesing it by the 28,000 units to get the total contribution there. And then likewise for vegetarian meals, then our total contribution is obviously that 940,000. But now we know we need our per unit. In other words, our average contribution, all right, not the total contribution. So we take our total contribution and we divide it by the number of units that we've sold. And the number of units is obviously the 12,000 plus the 28,000, which is giving us now this 40,000 right here. Okay.
So that
What's going on?
616 came from? 616 and the 324 came from?
It came from, remember we said the contribution. So we can calculate it. I think this page is just frozen. Why is it behaving like this? Okay, I think it's just frozen. But yeah, you can calculate it. It's the contribution per unit times the number of units. So if we say, for instance, looking at vegetarian, 27 times, how many units did we produce? 12,000. And there you can see we're getting the 324,000. Okay, And then obviously we do the same in order to get your total contribution for your meat meals. Yeah, bo. Mm-hmm.
After we got the aggregate rating, like they want us to split it between two products. Can they ask us, like, will they, here, how do they know not to do that? Or if we had done it, would we just not have gotten marks out of it?
So you're saying, how would we have known to do that?
Not do that, because like here, you got your aggregate break-even point as 25 something units.
Yeah.
Here they split that up between, for example, meal A or meal B.
Mm-hmm.
How do
So
they know about it?
we have to, let's go to that question. So that question is 3.2. Okay, so here they said they also want the sales, huh? But I did not actually calculate the sales. So let's go to 3.2 because it's all about the wording of the question. So in 3.2, they say calculate the aggregate and sales. All right, and sales. So it's exactly the same question, actually. Okay, so let's actually do that because I know exactly what you are referring to, right? If I go to question 3.2 that we answer, does this, no, that's not 3.2, but 3.2 is here. Okay, so here, if you look at the back of the textbook, did they ask for, they just asked for and sales. They didn't ask us to split it here. But I'm going to show you how to split it, okay? Because I do know there is a question where we did split it. I think it might be 3.8. Let's see. Yeah, 3.8. We did split. Can you see here? So let's just quickly see the wording on 3.8. Because you need to be able to do this if they ask. So I think it's important that we... So here they say, prepare the statement showing unit sales, variable costs, and profit contribution, including these values as a percentage of sales. Okay, so that's not what we're interested in. Second part though, calculate the sales required of each product to generate total contribution of 1,200,000 per annum. So this is the same as saying divided by our fixed costs, okay? But here, we're going to add the contribution of 1.2 million to the fixed costs, which is what we did. Did we do that? Total units sold to generate a contribution of da 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 da. Okay, so we didn't. We just divided by. And they did not give us a fixed cost here in this question. Okay, so that's fine. Fixed manufacturing overhead of 0.25. Okay. Anyway, so in this question, obviously, they're saying of each product. So we need to distinguish how many units we've sold of each product. How do you do that? You have to go back to the sales mix. And the sales mix, if you look, you have to look at sales, and you see there under sales, it says product X, you've got 538,000. Product Y, you've got 1,168,000. Can you see that? And then product Z, you've got 921,000. So that shows you your product mix. So then what you need to do is you're going to add all of those together, okay? When you've added all them together to get your total sales units, you then divide your total sales, you then say for product X, 538,950 divided by your total sales units, your total RAND sales. That's going to give you what proportion of product X do we sell? Or is what proportion of product X is taken up in our sales mix? Does that make sense? Then what you're going to do is you're going to then say, okay, that percentage times the sales that we obviously need to meet. And that's going to give us the amount of sales that needs to be sold by each of those respective products. Okay, you do the same thing if you've calculated break even in terms of units. So you know the total number of units that the business needs to sell of all its products, then you just have to apportion it to each of the according to the sales mix. Okay, so that's how you would deal with such a question. Okay, so here, let's go back to what we were actually dealing with. So yeah, we've gotten now our contribution, average contribution per unit, which is a 23.5. Okay, let's see if this thing is now, why is it misbehaving like this? This is strange. Okay, all right, no, that's fine. Anyway, I'll just use my cursor then. But it is highlighting. I just can't. Okay, I don't know what that's about. Okay, anyway. So we then say, okay, total fixed costs, which we calculated, and that was 600 divided by the 23.5 units. Okay, 23.5 units. And then obviously we get roughly about 25,532 units. Okay. Yeah. There we go. Everybody happy? Okay. Then, remember they said the sales and sales. So, what now must happen there to get our total sales? We want the break even in units and we want the break even in sales. Yeah, we do need to times it by something. Okay. So we have 25,532 units, right, that we must produce in order to break even. Times what? If you look at question 3.2, it'll give you the answer if you've got it jotted down in your notes. And the answer is also right in front of us. Yes, we have to times by the average contribution. I'm not trusting this. Seems to be freezing. I don't know what's going on. Okay, so if you times that, what are you guys getting? Let's see. It is just typing. Okay, maybe it doesn't want me to use commas. I don't. Yeah, no, it's freezing. So, what do you guys get when you times the 25,532 times your 23.5, our average contribution per unit?
So it's 25532.
25532.
Okay, 600,002.
600,002. Okay, which you can see is covering the fixed cost. Can you see that? That would then be our sales. Okay. Okay. All right. We are now back in business. So that was question one. That's what they needed you guys to do for question one. And you'll see in the past papers, almost every one of them asked for the average sorry, your average aggregate break-even point. Okay. So moving on to question 2. Question 2, they say calculate the production quantities of longevity truck and short truck required in order to maximize profits. Okay, so we got 2 trucks. Okay, longevity and short. Okay, so here they say Bago Pty Ltd owns a chain of truck stores. They have introduced 2 new trucks, longevity and short. Production capacity is limited to 2,120,000 production hours. Okay, so here again, remember you guys are under pressure in terms of time. Okay, so usually we will not ask you to try and calculate more than one limiting factor, usually. Okay, depending on the nature of the question. There is no restriction on the number of direct labor hours that can be worked. So here they are making your life easy. Don't waste time with direct labor hours, assessing whether it's a limiting factor or not. Just work on production hours. Then they tell us budgeted fixed costs are expected to be 3,800,000. Calculate the production quantities of longevity truck and short truck required in order to maximize profits. Okay, so there you got the breakdown of the information that they've given us. Okay, then the objective is to answer the required question. How do we go about that? How do we go about establishing the production quantity that's going to maximize our profits? How do we do that? Sorry? Okay, I see you're doing it step by step, but overall.
How much we have available, how much we need versus how much we have, and see if what we need is exceeding what we have.
You're still giving me in a step by step. Why are you doing that? Where do you want to go?
We want to rank and see we allocated resources to.
How do we rank?
See where our contribution margin is, what more comfortable at this product.
Aha. Remember the question is, which production quantities are going to give us maximum profits? Isn't it? That's what they're asking us. We must establish that. How many longevity trucks must we produce? How many short trucks must we produce to get the maximum profits? All right? And Nadia was alluding to it. Okay? How do we then go about doing that? We go about doing that by establishing which product or which truck in this particular instance gives us the maximum or the highest contribution margin per limiting factor. What's our limiting factor here? Production hours. So where do we get the most bang for our buck in terms of production hours? We together. So our whole objective is that, and that's then going to guide us on the ranking, which one are we going to produce all of, and then if we have remaining production hours, we can then produce the other product or the other truck in this particular case. Okay, so when you see this question mentally, you know this is what I need to do. Then now we go to the steps. How do we go about doing that? This is where now what Nadia again was saying now comes into play, where we say, okay, what do we have available? We have 2 million, how much was it? 120 production hours available. All right. How much of that do we need for longevity truck? And how much do we need for short? Okay. So here, remember here we're revising. Guys, I don't know what's happening today with this device of mine. I don't know if it's the pen or, yeah, I think it's the pen. Goodness. Okay, anyway, so that's fine. So here, production hours per truck of longevity, you require 200 hours. Okay? And then in terms of short, right, the production hours per truck is 160. Okay, so we know the production hours now required per truck. Happiness there. Okay, they didn't give you this information, huh? Did they? Oh, they gave it to you. Okay, they're making your lives easier. Sometimes they can say, to produce 1,000 or to produce 500 trucks of longevity, this is the number of hours it takes. We want the per unit because we're trying to find out the contribution margin per limiting factor. Does that make sense? Okay. So there we go. We've got that. Then we say, okay, cool. Now, we now need the contribution per truck. All right, contribution for your longevity truck and then the contribution for your short truck. How do we get that? By saying sales minus your variable cost, we get our contribution. Okay, all right, so here some of this is not really relevant. This is what I'm talking to right now. Okay, so here if we look at longevity, you see that the sales, and let me verify that. Yeah, the selling price, sorry, per truck is 1,200, and then the variable cost per truck is 700, which gives us a contribution of 500,000. If we look at your short, 900,000 selling price per unit, and then obviously your variable cost there is 500,000, which then gives us a contribution of 400,000 per truck when it comes to short. So now our contribution per hour for the respective trucks. So we then say 500,000 divided by your limiting factor, which is 200 hours, gives you 2,500. Okay, cool. We've got that, 2,500. Now let's compare with short. 400,000 contribution divided by your limiting factor of 160, you get, can you imagine, 2,500. So how do we rank these? Because both are giving us 2,500. How do we rank them? Ah, you guys can't see.
We don't have to say what is the limiting factor and what's not. What are points?
They told us that what do you call this? Production hours is the limiting factor. They told us the other variable, direct labor, is not a limiting factor. So we just take that information. We will check, we will double check to see how many, when we do the, okay, so for instance, let's say if longevity was 2,400 and short remained at 2,500, then obviously we're saying that it's more profitable to produce short, isn't it? So we're going to produce all of short, right? And then whatever we have remaining we'll give to longevity. Does that make sense? So in that process of checking how many hours do we have left, we will obviously establish how many hours do we need to produce all of the demand for short. Does that make sense? So we would get to that, but we would do exactly as you said. Okay. So here, in this particular scenario, we have a situation where it's the same, all right? And I can only imagine what might have been going on with the guys who wrote this paper, because to my knowledge at least, I don't think there's an exercise where you get the same ranking. So what do you then do? You then now need to look at the number of projected sales. Why? Because that's an indication of demand. Does that make sense? So which product has the greater demand is what we should focus on producing all of, and then we move to the next product and say, okay, whatever we have left, we'll then produce for this product which has lesser demand. Okay. So yeah, this for me was a Very interesting question. Okay, so we know that for product, for longevity trucks, we need 200. Okay, our demand there is 8,000 trucks, isn't it? Okay, so here you can see 8,000 trucks. This is what you were talking about, Thomas. 8,000 trucks times 200 hours. You obviously get 1,600,000 hours that you need for longevity. Okay, we can obviously produce all of those because the total hours that we have is 2,120,000. Okay, so what then is the remaining hours that we then have? Here you can see it's this 520. Okay, then we ask ourselves, okay, but how many trucks can we produce with 520 for short? So we then divide that 520 by 3,000 by 160, and we get 3,250 trucks. But then how many trucks did we want to actually produce? 5,000. Oh, so we can't meet the demand for both trucks. Or we can't produce all the trucks that we would have wanted for both our two trucks. Okay, so then now you can see this is your final production plan. Going to have the 8,000 of longevity and then have the 3,250 of short, okay, due to limiting hours. So yeah, this question, in my opinion, a bit unfair because there's nothing that has given us that foundational principle to say produce the trucks where the demand is higher if both the contributions according to the limiting factors is the same. Okay, but fortunately for you guys, this is a paper they wrote last year, so we can obviously revise that. So there now they want us to calculate, isn't it was about calculating the maximum profit. Okay, so obviously you then say obviously the 8,000 times your contribution, okay, and then you're going to get that 4 million. Okay, here they started all over again by saying selling price minus the 700,000 variable cost. All right, but you could have just said contribution times your number of units. Okay, and so we do the same thing for your short, and then we add those two together, and then obviously there's the portion that is fixed, which you deduct in order to get your profit. Did they tell us our fixed, or we have to calculate? Yeah, they told us that our budgeted fixed cost is estimated to be 3.8 million. Okay, so that was your question 2.1. Sorry?
So did you say billion?
Did I say billion? I thought I said 3.8 million.
Billion.
Is it billion? No. Isn't it million?
See how many zeros are?
And they 6? Oh, you mean here?
Yeah.
Oh, okay. Yeah, no, that was just an error. Life has not been kind to me, guys. I need more sleep in life. And yeah, it's not allowing me at this point. But when you guys go and write your assessments, I'm sleeping nicely.
And it's our turn.
And it's your turn, okay? So that is our 2.1. That is our 2.1. Then here, we'll just discuss this quickly. It was just theory from there on. So 2.2, they simply asked you guys, define a relevant cost, okay? Relevant cost in general, in managerial accounting refers to those costs that are affected by a specific business decision in the short term. These are costs, and here now we're looking at some key things that you'd probably want to add into your definition. Another important thing is to ask yourself, what is the mark allocation for this definition that they're asking? Because here I also just added characteristics, so we know a little bit more on in the event that there is more marks allocated to such a question, okay? These costs are future orientated, okay? For us to be discussing relevant costs, we're looking at all our alternative costs, right? We cannot be discussing alternative costs of things that have already happened. Those are sunk costs, okay? So it's obviously future orientated, okay? So here they say they are expected to occur in the future as a direct result of the decision. And then differential, they differ between alternative decisions. That is, they will vary depending on the choice of action, okay? Right. Then obviously here, characteristics of relevant costs, you wouldn't have needed to actually add this in, but obviously I just thought, no, it's good information to obviously be aware of when it comes to relevant costs. Avoidability. Relevant costs are avoidable if a particular decision is not implemented. So in other words, you pick the alternative. All right. If a cost will be incurred regardless of the decision, it is considered irrelevant. We saw this when we were discussing the slides or introducing the theory to this. And then cash flow impact. Relevant costs usually have a cash flow impact, meaning they result in actual cash being spent or saved. That's why they are relevant. We want to, at all times, as financial professionals, reduce our costs, because in reducing our costs, where possible, obviously, we're increasing our revenue. It's the easiest way to increase your revenue. Just reduce your cost. Okay? It's harder to make a sale than to reduce your costs. Okay? Right. Incremental nature. These costs are incremental or marginal when compared to an alternative. This can include additional costs incurred or savings realized by choosing one option over the other. Okay, right. Then the second question that they asked there is list 3 scenarios when relevant costing can be applied in decision making. This I also got off of the slides. Make or buy decisions, whether to add a new product line, whether to accept or reject special offers, whether to replace property, plant, and equipment, whether to continue or discontinue or shut down a division, department, or subsidiary. And then lastly, on pricing of products. Okay, so that was your 2023. I'm sure you guys can see it's not terrible, as long as you have made sure to practice.
The question 2 is a bit tough.
The question 2, yes, I can see where that could have very well thrown off a lot of people, because you would have probably started questioning yourself and saying, am I really supposed to be checking on what's the most profitable product mix based off of the highest contribution per limiting factor? All right. So I can imagine that would have thrown off a lot of people. Yeah. But let's pause it from here. I don't know if there are any questions or thoughts.
So you're gonna put this up on